President Trump shocked the world yesterday with an unexpected announcement that has left many reeling. In a move that has significant implications for the global economy, he declared sweeping new tariffs on all U.S. trading partners, a decision that has sparked a wave of reactions from various sectors. He announced sweeping new tariffs on all U.S. trading partners, a decision that has sparked a wave of reactions from various sectors. The president, standing firm on his stance, called it Liberation Day, a term that has already become a point of contention among critics and supporters alike. He called it Liberation Day, emphasizing his belief that these tariffs will free the American economy from what he perceives as unfair trade practices. However, the immediate reaction from the financial markets was far from celebratory. Investors called it Black Tuesday, as the stock markets took a nosedive in response to the news. The sudden announcement sent shockwaves through global markets, causing a ripple effect that was felt in trading floors around the world. The tariffs, effective immediately, will slap a minimum 10% tax on all imports. This move is seen as a direct challenge to the current trade norms and has left many businesses scrambling to understand the full impact. Some countries face even higher rates, up to 20%, depending on the industry. This has raised concerns among international trade partners who are now considering retaliatory measures. This news blindsided investors and sent shockwaves through global markets. The uncertainty has led to a volatile trading environment, with many fearing a prolonged economic downturn. The tariffs mark a significant escalation in Trump's trade war, a conflict that has been brewing for months. The president claims these measures are necessary to protect American jobs and businesses from what he describes as predatory foreign practices. He claims they are necessary to protect American jobs and businesses. However, the immediate impact on the ground has been one of confusion and concern, with many small business owners unsure of how to navigate the new landscape. However, many experts warn of dire consequences. Economists are predicting a range of negative outcomes, from higher consumer prices to potential job losses in industries that rely heavily on imported goods. They argue that tariffs will lead to higher prices for consumers, hurt American businesses, and damage the global economy. The fear is that these tariffs could trigger a trade war that would be detrimental to all parties involved. The timing of the announcement couldn't have been worse. It comes at a time when the global economy is already showing signs of slowing down, and this move could exacerbate existing issues. It comes at a time when the global economy is already showing signs of slowing down. Many businesses are already struggling, and the added burden of tariffs could push some over the edge. The tariffs are only going to make things worse. The uncertainty and potential for retaliatory tariffs from other countries could create a hostile trade environment that stifles growth and innovation. This is a developing story, and we will continue to follow it closely. As the situation unfolds, the true impact of these tariffs will become clearer, and we will keep you updated with the latest developments. The market reaction to Trump's announcement was swift and brutal. U.S. stock futures plunged in after-hours trading, erasing all of the day's earlier gains. The S&P 500 futures tumbled 1.7%, while the tech-heavy NASDAQ 100 futures plummeted 2.5%. The Dow Jones Industrial Average futures also fell sharply, down 0.7%. This sell-off reflects the deep uncertainty and fear gripping investors. Investors are scrambling to make sense of the new tariffs and their potential impact on the global economy. The sudden announcement has left many financial analysts and traders in a state of shock. The volatility in the market is a clear indication of the lack of confidence and the heightened sense of risk that now pervades the trading floors. The S&P 500 futures tumbled 1.7%, a significant drop that wiped out the gains made earlier in the day. This index, which is often seen as a barometer of the overall health of the U.S. economy, is now reflecting the deep concerns of investors. The tech-heavy NASDAQ 100 futures plummeted 2.5%. This is particularly worrying as the tech sector has been one of the strongest performers in recent years. The sharp decline in tech stocks suggests that investors are bracing for a prolonged period of uncertainty and potential disruption in the industry. The Dow Jones Industrial Average futures also fell sharply, down 0.7%. This index, which includes some of the largest and most established companies in the U.S., is now showing signs of strain. The broad-based sell-off indicates that no sector is immune to the current market turmoil. This sell-off reflects the deep uncertainty and fear gripping investors. The market is reacting to the unknowns surrounding the new tariffs, and the potential for a trade war is causing widespread anxiety. Investors are now questioning the stability of the global economy and the potential for further disruptions. No one knows how long these tariffs will last or what their ultimate impact will be. The uncertainty is making it difficult for businesses to plan for the future, and the lack of clarity is adding to the market's volatility. Financial analysts are now revising their forecasts and trying to assess the long-term implications of the new trade policies. But one thing is clear: this is not good for business. The tariffs are already raising prices for businesses and consumers. Companies are now facing higher costs for raw materials and components, which is squeezing profit margins and leading to higher prices for end products. The tariffs are already raising prices for businesses and consumers. This is leading to reduced consumer spending and lower business investment, which could have a ripple effect throughout the economy. The increased costs are being passed on to consumers, who are now facing higher prices for everyday goods and services. They are also disrupting supply chains and creating chaos in the global economy. The tariffs are causing delays and increasing costs for businesses that rely on international trade. This is leading to shortages of goods and disruptions in production, which is further exacerbating the economic impact. The market is now pricing in a significant risk of a recession. The combination of higher costs, reduced consumer spending, and disrupted supply chains is creating a perfect storm that could lead to an economic downturn. Investors are now bracing for the possibility of a prolonged period of economic weakness. And if that happens, it's going to be a rough ride for everyone. The potential for job losses, reduced incomes, and financial instability is now a real concern. The market is sending a clear signal that the road ahead is uncertain, and the impact of these tariffs could be felt for years to come. Ironically, the markets had actually closed higher earlier in the day. The Dow Jones Industrial Average gained over 200 points, while the S&P 500 and Nasdaq also posted solid gains. Investors were feeling optimistic, hoping for some positive news from the White House. Some analysts believe that the earlier rally was driven by short covering. Others believe that investors were simply caught off guard by the timing and severity of Trump's announcement. Whatever the reason, the earlier gains quickly evaporated after the news of the tariffs broke. The market is now firmly in bear market territory. The question now is, how much lower can we go? The tariffs are not just an American problem, they are a global problem. And global markets are reacting accordingly. Asian markets were the first to feel the pain. Japan's Nikkei 225 plunged 4%, while South Korea's Kospi tumbled 3%. European markets also opened sharply lower. The tariffs are already having a negative impact on global trade. Businesses are delaying investments and canceling orders. Consumers are cutting back on spending. The International Monetary Fund, or IMF, has warned that the tariffs could push the global economy into recession. The IMF is urging countries to work together to resolve their trade disputes, but with Trump in the White House, that seems unlikely. He seems hell-bent on starting a trade war with the entire world. Section 5. Economic Fallout, Predictions and Concerns. Economists are scrambling to assess the potential impact of Trump's tariffs. These tariffs, which have been a significant point of contention, are expected to have far-reaching consequences on various sectors of the economy. The uncertainty surrounding these measures has left many experts in a state of apprehension. The consensus is that they will be negative for the United States economy, but the magnitude of the damage is still uncertain. Financial markets have already shown signs of distress, with stock prices fluctuating wildly in response to the latest news. Investors are on edge trying to predict the long-term effects. Goldman Sachs, for example, has warned that the tariffs could shave 0.5% off U.S. economic growth this year. This prediction is based on detailed economic models that take into account various factors, including consumer spending and business investment. They also predict that the tariffs will lead to higher inflation, which will hurt consumers and businesses alike. Higher prices on everyday goods mean that families will have less disposable income, which could lead to a decrease in overall economic activity. Other economists are even more pessimistic. They believe that the ripple effects of these tariffs could be felt for years to come, potentially altering the economic landscape in ways that are difficult to reverse. They argue that the tariffs could trigger a full-blown recession. The fear is that increased costs for businesses will lead to layoffs and reduced investment, creating a downward spiral that could be hard to stop. The tariffs are a tax on American consumers and businesses, said John Canavan, an economist at Oxford Economics. His analysis suggests that the burden of these tariffs will fall disproportionately on lower-income families, exacerbating existing economic inequalities. They will lead to higher prices, job losses, and slower economic growth. The combination of these factors could create a challenging environment for policymakers who will need to find ways to mitigate the negative impacts. The tariffs are also raising concerns about the 2026 midterm elections. Political analysts are closely watching how these economic issues will influence voter behavior and campaign strategies. Republicans are worried that the tariffs could hurt their chances of holding on to Congress. The economic fallout from these policies could become a central issue in the upcoming elections, potentially reshaping the political landscape. The tariffs are having a ripple effect across the entire economy. Some sectors are being hit harder than others. Home builders, for example, are getting hammered. The tariffs on lumber and other building materials are driving up construction costs. This is making it more expensive to build new homes, which is bad news for the housing market. The auto industry is also feeling the pain. The tariffs on steel and aluminum are raising costs for automakers. This is forcing them to raise prices, which could hurt car sales. The tech sector is also vulnerable. Many tech companies rely on global supply chains. The tariffs are disrupting these supply chains, which could lead to higher prices and production delays. Adding to the uncertainty, other economic indicators are painting a mixed picture of the economy. The ADP report, for example, showed that private sector employment rose by 155,000 jobs in March. This was better than expected and suggests that the labor market remains strong. However, the ISM manufacturing gauge showed that manufacturing activity contracted in March. This is a sign that the manufacturing sector is slowing down, which could be a harbinger of broader economic weakness. The Labor Department also reported that job openings fell in February. This suggests that employers are becoming more cautious about hiring, which could be a sign of slowing economic growth. Amid the market turmoil, investors are flocking to safe haven assets like gold and bonds. The price of gold surged $19 an ounce, trading near fresh highs. Gold is often seen as a safe haven asset during times of economic uncertainty. The yield on the 10-year Treasury note, meanwhile, fell to 4.19%. Bond yields move inversely to prices. So when bond prices rise, yields fall. Investors are buying bonds as a safe haven from the stock market volatility. The markets are currently reeling from Trump's surprise tariff announcement. The future is uncertain, and investors are understandably nervous. Christine Short, an analyst at Wall Street Horizon, summed up the mood best when she said, "We're in uncharted territory here. There's a lot of uncertainty about what happens next." David Waddell, CEO of Waddell & Associates, echoed those sentiments, saying, "The market is pessimistic and oversold. Investors are fleeing to safety. The only thing that is certain right now is that there is a lot of uncertainty. The markets hate uncertainty, and that's why we're seeing so much volatility. Buckle up, folks, it's going to be a bumpy ride."